Hey everyone, in this short and simple video, I'll show you what is a pin bar, what is a bullish pin bar, what is a bearish pin bar, and then I'll talk about some of the key facts about pin bars. And lastly, I'll teach you a simple way of trading a pin bar. Pin bar is a single candlestick setup that indicates to price action traders into potential change in the market trend. A pin bar is an elongated wick that sticks out from price action and indicates a certain price point in the market that was rejected by the traders. A pin bar looks like this. It has a long wick and a small body. The tail of the pin bar shows the area of the price that was rejected, and the implication is that price will continue to move in the opposite direction of the tail. An important rule for identifying a pin bar is that the long wick should comprise at least two-thirds the size of the entire candle. Pin bar is one of the most reliable candle formations you can see on the Forex chart, and many traders consider this as one of the most powerful candlestick patterns for trading because they show a clear rejection of a price level, and this is followed by a large move in the opposite direction of the rejection. A pin bar can be bullish or a bearish pin bar. So what exactly is a bullish pin bar? Well, a bullish pin bar candle shows rejections of lower price as the lower wick shows the bears were in control earlier, but eventually the bulls overcame. The bullish rejection pin bar gives an indication to take a buy position or consider closing your current position if you are selling any currency. Have a look at this bullish pin bar formed on an 8-hour pound US dollar chart. The bullish pin bar resulted in the market going up by almost 300 pips. And in this case, the market bounced off from a 200 SMA to give you another 140 pips after a pin bar was formed. So next up, what is a bearish pin bar? A bearish pin bar shows rejections of higher price cause the upper wick shows the bulls were in control earlier but was eventually overcome by the bears. The bearish rejection pin bar gives an indication to take a sell position or consider closing your current buy position as the market is likely to change direction. Let's take a look at this euro yen pair on the 8-hour chart. You can see there are multiple pin bars on this chart, but keep in mind not all pin bars are tradable, and I'll explain that in a while, which ones you should trade to have a higher probability of success. After the formation of this bearish pin bar, you can see that the market went down by several pips. Now that you have an understanding on what is a bullish and a bearish pin bar, let's talk about some facts about pin bars. Not all pin bars are tradable. The strongest pin bars occur in strong trends after a bounce from support or resistance area within a trend, or from key chart levels of significant levels. In this example of Euro Yen chart, this pin bar bounced off a significant area of resistance in a downtrend and a key level of 125, resulting in the momentum to continue in the downtrend. Similarly, if you look at these bullish pin bars, which was formed against the trend, they were not successful. You can see a few more bearish pin bars which were formed in the direction of the trend, resulting in profitable trades. To have a higher probability of success, trade a bullish pin bar in case of an uptrend and trade a bearish pin bar in case of a downtrend. Trading the pin bar strategy on higher time frames will, for instance, the daily 12 hours or an 8-hour chart will give you better chances of success. And lastly, pin bars can be traded successfully in both trending as well as in range bound conditions. Okay, so now I'm going to talk to you about my one simple pin bar trading strategy. My preferred method of trading is to trade in the direction of the trend, as a pin bar entry signal in a trending market offers a very high probability of success. So, number one is to identify the trend. If the trend is up, I will only trade the bullish pin bar. And if the trend is down, then I will only trade the bearish pin bar. So if in a chart, if the 200 simple moving average for the daily 12-hour or an 8-hour chart are all in the same direction, then I will trade in that direction. Second, I'll wait for the market to retrace to support or resistance area or any key level. If a pin bar is formed on any key level or a support or a resistance area, then I take the trade. Let's take a look at this US dollar Canadian daily chart. Clearly, the market in this case is downwards. So we have established the trend directions. So in this case, I will only be looking out for a bearish pin bar. And then here, the market retraces to a previous resistance level. A bearish pin bar is formed at resistance. In all the three examples, the trade would have been successful. Please make sure to put a stop loss slightly above the next resistance area and take profit at the next support level. So that's it, guys. I hope you liked the video and don't forget to subscribe. Happy trading!